And it's 8:45 a.m. East time. I'm very glad to host you here. CPI reports is officially at 6.4%. So it's a surprise to the downside. What does it mean for you? What does it mean for investors and for the stock market? So I'm very glad you decided to pop in to our Blockrevision new broadcast live. If you have any question, just pause it right now, and we'll discuss about the most important gauge of this week, definitely, and maybe even this month, that may set the market in a specific direction that we'll talk about in a second. But at first, let's head into intro. The most important for now. So let's look at this. Oh, I had to refresh it. It hasn't been refreshed. All right. So inflation rate year over year. So what means what we can find somewhere in the middle between what was the previous one and what's the forecast. So it means the market may start dwindling around the levels that are not maybe so much suppressed by the bulls, but still, as this inflation is lowering, we shouldn't bother too much. So if we just look at the tendency right here, we are steadily dropping, but as we can find, we have some difficulties of heading below 6%. Would it mean that within next few months we'll go back to 7% and remain here lingering around 6 and 7%? It's absolutely one of the scenarios that the bulls fear the most. But what about the elements that has increased in price recently? So that's the one that was expected, was this cost of used cars and trucks continued to decline, but this decline is not as quick as it supposed. However, this slowdown was seen in food prices, so it's a positive. Gasoline prices rising, reversing from a 1.5% decline in December, and both fuel, oil, and electricity prices slowed. Although inflation has shown signs of peaking at 9.1%, as we can find here on a trading economics, it remains more than 3 times above the Fed's 2% target and continues to point to a broad-based advance on the general price level. So what we can find right here is that the market is trying to discount what already has happened. That's why we have a kind of a choppiness that's right now is very hard to trade. That's why if you are not advanced in stock market trading, better stay away from the screen, as you might suffer from a heart attack in a worst case scenario. This might be really atrocious. All right, so CPI report, how the markets are reacting. Right here we can find there are some charts for US 10-year Treasury note and stock futures. So I would rather take an insight with you on the live monitor. So just have a look at US 100. So right now we haven't chose the path, the exact path for US 100 yet. So the markets swinged up and down, and right now is mainly propelled by bears, but still there is still area of support that's right now is very hardly to go across. So right now for US 100 the decision is still yet to be taken from one or the other side. What about WTI? So recently we've seen that WTI has slowed down its momentum, but right now it might be a very good chance that WTI may start climbing up once again after hitting this bottom of this consolidation that was lasting since Friday. So for tomorrow we may see from tomorrow WTI might be seen as climbing up back towards 82.5. That's where a very important resistance is found. In terms of natural gas, exactly this one is performing quite well, but as we can find, the resistance right here is strictly the one that may stop natural gas for a while, and that will be highly expected this one to maybe consolidate within this area, and right after breakout above this downtrend line. So natural gas is the one to watch, as we have been going through very severe downward momentum, and right now we can find some signs of reversals. So RSI is climbing up, and the one thing we need to just prove in order to get once again to this upward trend is getting ahead of this 2.62 on a nice volume, and it may take a while, but should happen within two, at least three, at most 3 trading days. What about cryptos? BTC USDT is not really weak. If you just study the momentum, right now we have found a possible bottom at the recent support, but Ethereum USDT is a bit weaker than the BTC, as it broke through recent support being built somewhere around 1500s. So those are the charts to study. The most BTC USDT right now looks like more powerful one, but also the cryptosphere is not very reliant on the recent data that's obviously is favoring both. So for this element of chart overview, that's it for now. We are heading back into economy view, and the markets recently started to discounting the reality. So while the recent move higher in front end rates has been supporting the notion that the Fed may remain restrictive for longer than expected, the equity market has refused to accept this reality, and right now many of market participants found that the risk reward for betting for growth of major indexes is poor, and it's been even by many cases that poor as it's been during the bear market. That's why many of hedge funds has backtracked from putting money on whether it's S&P or US 100. So I would like to emphasize that the reality for the markets is that it has waited for elements of CPI reports. Right after it's been published, the positioning may switch a little from here, but as the CPI lowers down still, we might be seeing a positive momentum on major indexes, at least by next reports that would take place in a month. That's why it should be positive. The rest of the month should be positive, and as well at the beginning of March. In the beginning of March, we shouldn't see much of the negativity. So as Fed is data driven, that's the element that definitely shouldn't spook the board members and shouldn't pivot their stance about the economy. We are also discussing the debt limit. So that's the one of the issues that is returning as a boomerang. So the United States is no longer able to issue large amounts of debt securities. The debt limit and the specter of default stand in the way. The situation is not new in history, and in the end it always led to an increase in the allowed debt ceiling. Republicans have already passed legislation tying new spending cutbacks, however. So right now though there are two solutions, all right? So the first one is that the states raise the limit. That's the probable scenario. And the second will reduce spending. And so I wouldn't really buy it, as we always wanna spend more. Otherwise, the I would say the government will lose its I would say credibility, because they only promising some stupidities, and people are trying to follow that and act accordingly. So the federal government is extending its decision-making time by activating emergency measures in June. Countermeasures will stop working then. So what will it look like in practice? So bankruptcy is extremely unlikely, but there may be some downgrades. For example, Treasury launches emergency measures to curb some spending and investments. They are supposed to last until June. Treasury will run out of money in July or August, and eventually the limit will be raised. But this is policy things that can go temporarily wrong. The dispute also means lower government spending, and therefore another break on the US economy. The market will be afraid of what may happen and hedges itself by raising credit default swaps to levels haven't seen since 2011. So those are the most likely scenarios. So bankruptcy is rather unlikely, but inflation is the one thing that also may spook us along the